Good morning, everybody, and welcome to today's webinar with Castile Resources. I'm Dannika, Warburton, the Principal of Investability, and we have the pleasure of helping Castile with their investor relations. I'm very excited that you can join us today, and we've got lots of questions that were sent through, which we'll get to. But first, I'd like to introduce the Managing Director of Castile Resources, Mark Hepburn, who's going to run through a presentation. Over to you, Mark.
Thanks, Dannika, and thanks everyone for joining in. We do appreciate you taking the time to have a look at us. Let's get going. I know there's some questions at the end, so I'll work my way through the presentation and we'll go from there with some questions. And obviously, if you think of something during the presentation, please feel free to send a question through to Investability. Okay. So the focus has changed a little bit for us now in that we are truly a copper and cobalt story, and I've called it covered in gold because there obviously is a large contingent of gold involved in our revenues, which you would have, I guess, seen develop over the last sort of 2 to 3 months. The biggest change for us, however, has been the increased amount of copper, both in that indicated resource, the price of copper itself, and therefore the component that it makes up in our revenue split. And of course, now that we are moving down into a more pure copper and pure cobalt metal production, we're seeing that being resulted in stronger economics for our project as well. So the gold has not changed. There's still plenty of gold. It's just that there's now more copper and more cobalt in what we're doing. And in the last few weeks, you would have seen, I guess, finally the magnetite come to fruition and seeing what that is worth. And so from there, it's been a very exciting couple of few months for us. So I'll let you read the disclaimer in your own time. I think the important one here is that Petra Capital have taken up research on us about 6 months ago. And today they put out another research note valuing us at 65 cents. So really today is about, I think, for the first time, getting out there and showing really what this asset can do, and therefore what it's worth, and therefore where we're situated in the market and what we're trying to do with our stakeholders. So it really is, as we always sort of knew, it was this fantastic gold copper IOCG, which is obviously the style of mineralization, but it was about drilling it out to find out what it was worth, which we have now done, and we can quantify, and you'll see that further quantified, not just in the research that you see out now, but also in our PFS that'll come out in about 6 to 7 weeks. This is what we've been working towards for those last 18 months, and I'm glad to say we're very happy that we now have a very robust commercial set of indicated resources that we're confident will flow through into that study that we're doing. So we're certainly, I guess, now stepping up and saying that we can be a direct supplier to the battery manufacturers, and certainly the recharging network that will be set up to help supply or help obviously recharge those electric vehicles as they become more predominant around the world and also within Australia. I think one of the most important things that's happened also from our revenue and our product mix is this pure cobalt metal that is considered a critical mineral by the Australian federal government, and therefore they are very interested in us getting through to production and producing that cobalt for that particular market. And I guess just towards the end, we'll go through what it means for the region. We've got 1,000 square kilometres, but within that 1,000 square kilometres, all within trucking distance, we have known deposits that can be our next forms of production that we'll be looking to get onto. And I'll go through that at the end. Just quickly, you can see we're very well situated. We're 75 kilometres southwest of Tennant Creek, so 3,000 to 3,500 people in Tennant Creek. Good serviceability for the exploration and development, I guess, mining industry, which is what we are. You can see Rover 1 here, which is the flagship. I'll talk a little bit about Rover 4, Explorer 108, and we're only talking 40 kilometres away. Easily truckable. Explorer 142, again, easily transportable to our infrastructure hub here at Rover 1 once we're up and running on our first project. And as you can see, plenty of facilities over here with the highway, the natural gas pipe, and the train line for some of our product, most obviously of which the most will be that magnetite, which will be about 80,000 tonnes a year. We've all seen, I guess, the power and the fantastic grades that these IOCGs give out. There's no question that Tennant Creek was the richest mine or the richest gold field in Australian mining history, but it was also very rich in copper, as we saw. And the great example was the Warrego mine, about 60 kilometres to our north, very similar in structure and size to what we're looking at here, that delivered 7 million tonnes at 8 grams and 2% copper, and was certainly probably the most profitable mine in Australia's history from that in that regard on a tonne for tonne basis. We're looking at a larger operation, but certainly we are looking to optimise everything we do. And you see there's different sections that have higher grade gold and different sections of this ore body that have higher grade copper. Put them together and you can see what we've come up with this large indicated resource. There's a bit of the drilling that we finished off on, where we wanted to know that the information, as I said, we're talking about a robust commercial indicator resource that we could hand over to mining, to the final engineers, if you like, who are doing the process design of both the for the capital expenditure and the operational expenditure for the project once it gets up and running, and feed those into our PFS. So that was the drilling we finished off on last year. And you can just sort of see the results. I've included that hole from 2020 as well, which was our first hole, 30 metres at over an ounce of gold and 1.5% copper. But again, long lengths of copper in here, 42 metres at 3.5% copper, down in what we're calling the Jupiter Deeps. And there's 13.5 metres at 7.5%. And it really does reinforce that historical drilling, that this is a very high grade ore body. And hopefully the market now can start to see what sort of output it can produce. So there's 4 products that we will end up producing, and it sort of gives a bit of a segue into how we'll be producing them as well. So you can see there in that top table, if you like, the gold ounces at 242,000 or 263 in total resource. I'm tending to stick at the moment to the indicator resource. I think that's our best opportunity that will pass through to the PFS and turn into our mining reserve. That's what we're aspiring to. But also down here, you can see there's about just under 4 million tonnes down here, and obviously some more inferred material. They're taking it up to just under 5 million tonnes. So we've been clear to the market that this will be approximately a 500,000 tonne per annum, if you like, mining and processing project. So from that, you can deduce, which has been done in the research by Petra as well, that will be about 500,000 tonnes per annum per year over 8 years. And then you just simply divide this by 8 to get your annual production, or again, look to the research, around about 33 to 34,000 ounces of gold per year, 8,000 tonnes of copper per year, in between sort of 300 and 350 tonnes only of cobalt per year. And then there's around about 80,000 tonnes of magnetite per year. So again, you're looking at 4 different products, 4 different revenue streams. And so how does it all come together? Well, from that point of view, we want to be producing, and the strong message from the Northern Territory government and the federal government is we want value-added end user products, which is why we've gone down this 500,000 tonne processing plant and the methodology that we will use for the extraction. So you can sort of see, if you were to take that as an annual production, the 32,000 ounces, 8,000 tonnes of copper, around 300 tonnes of cobalt, 80,000 tonnes of magnetite, which sells, again, and this is from the research, at around about $300 per tonne. The magnetite is used in as a coal washing and a plastics, if you like, density modifying mineral, and is quite an inelastic demand for that. And we'll look to contract that off to maybe one or two buyers only. But you can sort of start to see why Petra come up with $200 million a year in revenue over that 8-year project life. And that's really at conservative numbers as well, 600 US gold and $3.50 per pound for the copper. And as we all know, they're a fair bit higher than that at the moment. But it's a very robust little project when you start talking about 500,000 tonnes per year, putting out that sort of 200 million plus style revenue. And I think it's important to say that all that drilling you saw was to get it up into this indicated grade. And that's where we're at the moment. And we'll see that improve hopefully as we work through this PFS and then go through to DFS. But the big thing will be that once we are underground and start underground drilling, we'll be able to pick and choose these areas and add to these numbers. So we're in the right metals at the moment. That 33 ounces of gold per annum is looking pretty good when you consider that we floated Castile back in February 2020. So the price has appreciated since then up around, it's come off today. I think it's back around 1900 today and fluctuating. But copper has had a very strong 2 years along with gold. Cobalt's been the big one, up around 82,000 US per ton sort of last week. I understand there's a few bits and pieces going on in the market on these prices over the last couple of days. But all in all, the trend is heading in the right direction for the metal that we are going to produce. And when you add the magnetite to that, it's pretty compelling. I think most of you that are listening in know the story around what's the requirement of copper in an EV, and it will require 4 times the amount of copper that is in an current internal combustion engine, and also will be required for its conductivity in that recharging network once they go in, and not just obviously not just in Australia, around the world. As much as Elon Musk would like to tell you, and probably through Twitter now from all accounts, that they no longer want to put cobalt in their batteries, they still have to, because if they don't, cobalt acts as very much as a stabilizing element within the battery, and those fires and issues that they've been having, they can't solve them without cobalt. And so I think you'll see the life of cobalt continue. So I guess you can say that we are now part of this, if you like, this electrification revolution. This is just a little bit on the magnetite resource that we put out. So, and bearing in mind, because they are the 2 key metals, the gold and the copper are the key metals, and the cobalt and the magnetite are byproducts. They are mined as a consequence of what we're doing. It's not bad that 24% of what we mine will be magnetite. We can recover 68% of that into what we're talking is this quality magnetite, coal washing magnetite product. And that's that P95 passing 53 microns. And so that's the standard that we'll be getting. So and we'll be able to play with that just basically with the size of the grind and determine what is the end price achieved for that. And obviously we'll be talking about that further when the PFS comes out. Okay, it's a pretty simple mining technique we're using. We're not reinventing the wheel here. The level intervals you'll see there, which are I guess marked out there for you in yellow and orange. As you work your way down through the deposit, they'll be 25 metres, and the stopes will be about 40 metres in length, and they will be paste filled. The rock for mining is very good. The mineralisation starts at around about that 300 metre mark, and in the diagram you're looking at here, gets down to about 850 metres. It is very important to stress here that 850 metres is not even the average of an underground gold mine in Western Australia. We don't hit the average for 10 years. So this is not necessarily a deep mine. You're also looking at there, the orange line heading off to the right of your page, if you like, is a 2-kilometre decline, which is obviously quite standard for this depth of mine on a 7-to-1 ratio. But you can see there also the picture there of you like if the haulage truck connected to like a trolley style system in the decline. We're doing a lot of work on the electrification of our process, and we're finding that a lot of the feedback coming from the actual drivers of the electric trucks that are being tested are frustrated having to change the battery every 2 to 3 hours. So from our point of view, if we can build this trolley system, not only will it save us a fair bit of dough, it will also not require a battery change in a 12-hour shift, which I think is relevant to obviously to those productivity levels. And from a commercial sense, you've got drivers that are now 10-year experienced drivers that are saying, well, this isn't working for us at a battery level, whereas this will work for them. So we're happy to work with both. And clearly, once you train a new section of workers on electrified equipment, that's when they'll become more mainstream. But for us, it is part of what we are doing now. I talked a little bit about those end products. And from the point of view of a revenue stream, this is a very important slide. We're going down the pressure oxidation route, not because this is difficult ore, it's because this ore is very amenable to that process and producing those end user finished products that attract premiums rather than simply sending all of these metals off in concentrates up the train line and to a smelter somewhere in Asia or somewhere in Europe. So we can attract all of that premium ourselves. Given that it's 500,000 tonnes, you see we've got grinding and magnetic separation up here in the middle of the page to start the process. And then we have a gravity, and then we go through a bulk concentrate. By that stage, the 500,000 tonnes that initially went into the crusher has 400,000 tonnes of it have now been removed and gone not only to waste, but obviously to making that magnetite product. Then as you move down through the processor, there's another fine grind, and it's this point that we can remove all of the sulfides from the ore and produce a pure cobalt metal and a pure copper metal, and we can pick up the rest of the gold that we didn't get in gravity. So about 22% of our gold will simply come out in gravity, and then the rest will come out as a solid in this oxidation stage. But you can see these recoveries down here at the bottom of the page, particularly for the three metals that go through oxidation. They're fantastic recoveries. And whilst while there was certainly no problem going with the concentrate method and sending these concentrates, as I say, offshore to be smelted, we make a lot more money out of making these pure metals. And again, we've attracted, if you like, national interest because of the fact that we are producing what is considered to be a critical or a highly strategic metal, this pure cobalt, which has attracted a lot of interest for us. So they were the main reasons we've gone down this oxidation path, simply to make more money and extract more money from every single tonne that we mine, rather than hand that over to smelters offshore. And again, governments are very, very supportive and very strong in their message about value-add products. So that's really where we are with Rover 1. It's the flagship project. You're going to see the PFS in 6 weeks and what it all looks like from a financial and a modelling and an ESG point of view. So let's have a little look at what it means about for, if you like, our regional play or some of the regional style of deposits we have. Bearing in mind that now, if we assume that Rover 1 gets up, we can look 40 kilometres to the west to have a look at Explorer 108, 30 kilometres away is Explorer 142, and 2 kilometres away is Rover 4, which we'll have a quick look at now. So Rover 4 comes within 40 metres of that design you have seen for that decline. This is still largely the magnetite ironstone, and the green areas you see are the copper mineralisation. There's no resource yet at Rover 4. We are working towards that now. But that could be the very first ore that we feed into our processing unit rather than having to wait, because this decline will take 12 months to dig. We can be straight into the ore here, and this can be early feed for the processing plant at Rover 1. And this just gives you a plan view of what it looks like from above. So you can see it's not an accident that our engineer, Mike, has designed this box cut specifically in between Rover 1, which you see here. Decline passes directly over Rover 4. Not an accident, and we'll see how Rover 4 pans out for a resource. There's already 48 holes that have been drilled at Rover 4 by Adelaide Resources, and then we purchased this tenement off them in 2019. But you can see there's some pretty handy grades there. 21 metres at 1.8%, 17 at 1.9, and this is quite shallow. The shallowest mineralisation is 135 metres vertical and about 150 metres down hole, as you see there from some of those drilling intercepts. So we'll be putting probably up to 4 holes in Rover 4 in this drilling program that's coming up in the month coming up. Let's move over to Explorer 108, which is about 40 kilometres to the west. This will most likely be, from a distance point of view, being 40 kilometres away, this will be our next, if you like, targeted project. Assume that there'll be a processing plant in place that can handle this ore, because that will be the case when Rover 1 gets up. And then we'll start to simply do a subset of the current resource, which is 12 million tonnes at 3%, 3.2% zinc and 2% lead. We'll be looking to turn that into a 4 or 5 million tonne, obviously at much higher grades of those two. There's copper there as well, and I've talked a couple of times openly that we are looking for this primary copper source, which we hope to find somewhere down here. And again, with Mount Isa 600 kilometres to the east, it is in exactly the same style of mineralisation, host rock, stratigraphy, everything is the same. We have feeder zones in copper, which make up this 6 million tonnes at 0.4. And so if we can find where those copper feeder zones are coming from, that'll be the jackpot for us. A lot of work to do. I'm a little bit obsessed by that. So hopefully that will come to fruition for us. Explorer 142, I've deliberately put Rover 1 next to it because they are very similar in their geophysical properties. And when you think that this is 30 kilometres away from what will be the infrastructure at Rover 1, you can see what's happened here at Rover 1. We've developed the gold zones, the copper zones. Here over at 142, we have the copper zones, and we're now looking for the gold zones. We're off to a pretty good start with 180,000 tonnes at 5% copper. You can see the amount of drilling that's happened at Rover 1. There's only been minimal drilling here at 142, around about 4,000 to 5,000 metres, but it's a nice little resource to start us off, and that would be next in line, obviously, to run through that processing infrastructure at Rover 1. I'm aware that we're getting towards the end of our time. This is something further out west that it's out in the Warumpi. It's about 300 kilometres west of Alice Springs. Some fantastic hits there at surface with rock chips, up to 10% copper that have been released to the market. And we'll be looking to do some magnetics on that ground this year and potentially pairing that with another company to have a look at it, because we are obviously full bore with what we're doing in the Rover field. We've got a very experienced board here, and these are developers of projects. They're not simply guys that hang around exploration companies. We are looking to develop this asset, and you can tell by the people that we've got. John Brown was head of Macquarie Resource Financing for 10 years and worked there for 20 years. Peter Cook and Jake Russell built Westgold. Jake is head of geology, if you like, or technical services at Westgold on our board. He has a 10-year background with the Rover field assets, as does Peter Cook, our chairman, and Michael Pogis and Mark Savage. You're seeing their work today as our mining engineer and our resource geologist. So a good mix of skills. My skills are background largely in financing, stockbroking and institutional, I guess, ECM over the last sort of 25 to 30 years. So really, we're on track for where we want to be now. We've worked very hard to get to this. And if you like, we've got through, I guess, the grind of drilling this asset out, this Rover 1 asset, and showing the market what we think it can do. Hopefully, you'll have a look at the Petra note that's been put out, valuing us at 65 cents. Current price, I believe, is around 16 or 17 today. So the job really is to try and get the market understanding that getting comfortable with the project and that disconnect between valuation. We do have diverse revenue streams that are a natural hedge for investors. And most importantly, we're going to be producing critical minerals for this, if you like, this electrification revolution. And I think that's going to stand us in very good stead with governments and the support we're going to get from both state and federal government. And we're looking forward to talking more about that as those relationships develop. But I think I'll leave it there, Dannika, and hand over if there was any questions or anything someone wanted us to go through.
Perfect. Thank you, Mark. That was very in-depth and wonderful presentation. So I think you've covered some of the questions that came through on email. However, if anyone on the call has any questions to ask, you can type them into the Q&A feature down the bottom of your screen. There's a couple, I'm conscious of time. We've got about 5 minutes to answer some questions. I'll jump to some of the ones that got sent through on email. Sam has asked, given the recent update to Castile's resource estimate, do you now see yourself as a compo company or a battery metals company? How should investors view Castile?
Well, I think now that with what's happened, I think the biggest change we've seen in this indicated resource from the previous resource from 2009 is that large increase in copper. And it is a good question, because now if you take the revenues from both the copper and the cobalt, which I do consider as battery metals, then we are a battery metals company. And it's almost like we're giving investors a natural hedge, if you like, against inflation with the gold. But it's not because the gold's gone away. It's because of this massive increase. It's like a 60% uplift to the amount of copper that we'll be producing at 8,000 tonnes a year. And if investors want to look at us as either and I think it makes more sense now to look at us as a copper exposure. But again, you've got the fantastic backup with the gold there.
Yeah. John said with the Petra note, with the 65-cent price target, and there's a bit of a delta between current share price, what do you think the market is missing?
I think that it's largely been, I think, the work that we've been doing to get to this stage, because we needed to, and I referred to this robust commercial indicator resource that we had to drill out. And so if you're looking at our company, you're looking at, well, hang on a minute, there's 4 different products here, there. Now we can very much define what that is. And I think the disconnect between our, the 65-cent valuation and the 17 or 18 cents that we're trading at is really getting to the market and the market understanding the value of the company, which hasn't, I guess, given that this asset was sitting in Westgold for so long and was never viewed as an individual asset. People knew about it because of its history at Westgold. But I think now that we can come out with an indicator resource and say what is confidently going through to our PFS, and we can back up that valuation with a PFS, I think the market is going to look at us very differently.
Yes. Peter emailed through on what is the attitude of the local community to the company activities?
Well, we're going about things we're making sure that we're doing things rather than just talking about it. The local community is engaged with us at all levels. And I mean, right through from the traditional owners who we are engaged with and in talks with the CLC on how best to run training programs and how best to run employment programs, not only directly with Castile, but indirectly through services that will form around us. And we're also looking at getting our name out there at grassroots level with what's called Northern Territory Sport, or for the Barkly region, the head of the Barkly region, Pam Dillon, who takes equipment that we supply, and we've supplied basically every kid in the region with a piece of sporting equipment or a piece of sporting clothing or both. And we're really making sure that the people understand what we are trying to do. And the CLC have been very supportive of us, and we're grateful for that. The government itself, right behind us, and hopefully we'll be looking at some announcements regarding how the government are viewing us both at a state and federal level as well.
Okay, and on the announcements, what can investors expect coming up in terms of news flow over the next 3 to 6 months?
Okay, well, we've talked about this drilling program that's coming up. We'll do a little bit more drilling in and around Rover 1 as a tidy up with some metallurgy and those sorts of things. That'll be the initial drilling. Then we'll move out to Rover 4 and hit those holes, and then we'll be moving to 108. We'll be getting downhole EM done on 108, and we've talked about this at various times. But it really is now about putting Rover 1 away and then getting out to this regional stuff and adding to what we have. Obviously, it is. I mean, the opportunity there is endless, and we've only just begun out there from an exploration point of view.
We are out of time, so to wrap up, is there anything that I haven't asked you that you would like to leave investors with?
Well, I think investors can now look at us quite confidently with that indicated resource and say, well, this is now what this company and this particular mine is capable of. At 500,000 tonnes per annum, it's not a big operation, but when you start spitting out those sorts of revenues, I think it's definitely worth a look.